Botham, who's the emerging markets economist at Schroders, joins us from London. Craig, good to have you on the show. How do you really see the U.S. situation panning out? How do you see the U.S. dollar impacting EM currencies, especially the rupee? Do you see the rupee going beyond 62 if the dollar's strength continues?
I think so if you look at how the fundamentals behind the rupee have improved since the taper tantrum in May of last year and then again the spike in September, you'd be surprised to see it return to the levels that we saw at those times. So I think that was around 62, so going beyond 62 would be quite surprising.
Great, let's talk about India. Do you worry that the Indian finance minister has set a rather aggressive target for himself in budget 2014, because given the kind of macros we are working with, it would be difficult for him to achieve that fiscal deficit target of 4.1?
Slightly, yes. So the deficit target of 4.1% seems to be based on quite optimistic assumptions around revenue growth and the like. So there would be a concern on our part that those are missed because those assumptions are just a bit too optimistic and that the reality falls short.
Then what's your stance on India right now? Can it get back to the 7-8% growth levels in the medium term, you think?
I think the potential is all still there, given that it's achieved it in the past, and it's definitely not matured as an economy in the same way that say China has or other more advanced economies have. There's still a lot of potential left, and so if they can just loosen up some of these bottlenecks, then they can return to those kinds of growth rates.
Now India has managed its external imbalance rather well, but this could come under pressure if crude prices spike further because of geopolitical tensions. Do you see that is a big threat, or do you think oil could be a big threat?
I mean, obviously with what's happening in Russia and Ukraine at the moment, with Russia conducting exercises on the border, the possibility for tensions to escalate is there. And obviously energy sanctions would be a key driver of a spike in oil prices. And at the same time, you've got ISIS making further gains in Iraq. So you wouldn't be surprised to see that at all.
How do you read into the recent comments given by the US Fed on interest rates? Because, you know, aside of the other risks, whether it's Ukraine or Argentina, at the core, of course, US markets are watching out for the timeline on when the Fed moves on interest rates. So how do you see that impacting sentiment?
So the current Schroders house view is that the Fed will start hiking in June of next year, and that there'll be quite an aggressive hiking cycle. I think what you'll see is a reduction in liquidity for emerging market assets, and so they'll be hit, but not to the same magnitude as they were in May of last year or in September of last year, but there will still be an impact. A number of economies are still quite vulnerable. The Fragile Five, for example, most of them are still quite fragile when you look at their external imbalances.
Craig, we've seen a decent pickup in economic activity in developed markets, but exports of emerging markets are not catching up the same way. Do you think this time it's different? And do you think demand for emerging market exports could increase in the second half of this calendar year?
I think the possibility that is still there. I think if you break emerging markets out into three sort of geographical groupings, into Latin America, emerging Europe and Asia, the linkage is still quite strong for emerging Europe, and particularly being driven by European capex. For Asia, you really see the US consumer coming through, and once you start to see wage gains, that's a possibility as well, so Asia can still benefit. The big concern is probably on LATAM, because their main commodities main exports are commodities, and as we've seen, the market for those just isn't what it used to be.
Okay, then broadly, where is it in emerging markets that you spot an opportunity? Will India continue to shine within the pack?
I think probably emerging Asia is still offering the best sort of, in terms of a macro growth perspective, is offering the best story. Particularly once the US recovery gets going strongly and the consumer gets involved, you could see Asia really starting to ride the American coattails. I think Latin America, as I said, is positioned to struggle for some time yet.
So, Craig, what are the key risks to emerging markets at this point in time? Russia, Ukraine, interest rates, or oil?
I think there's still two big concerns, probably what happens to the oil price, particularly for the energy importers, including countries like India, and then also what happens with Fed policy, particularly any surprises there in terms of a rate hike coming in much sooner than expected.